Well, we've had two major players in the resource space out with numbers today. Anglo American, one would have thought, would have received a slightly positive reaction, seeing that those numbers came in better than expected. But we've got that share price in the red. Your overall perspective there?
Alishia, I think it's a combination of two things. We're seeing the market at all-time highs. We're seeing global markets mixed, so no real direction with investors taking cash. And the second reason being that investors are possibly disappointed at the dividend and the dividend stance that Anglo American is taking out going forward for the company and for shareholders.
Taking a look at the results specifically, I mean, it seems that the market wasn't too impressed with BHP and its announcement earlier this week that it was bowing to pressure to put that cash to pile and announcing a share buyback of $10 billion this year. Anglo reiterating that it's going to be keeping its cash for investment. Taking a look at that decision by the company, what are you making of it?
Alishia, I think it's positive for the company in the long term. Anglo American has come out and they have cleaned. We've seen excellent results coming from Kumba, their De Beers. So really the company in a very good position to take advantage of growth going forward. And we see their tie-up with Lafarge in the UK. They're speculating that construction is possibly at the bottom, so they're going to be taking advantage of that, and they're going to be using that increase in cash to build on that. They're also seeing continued demand for commodities. So what they want to do is they want to take the extra cash and they want to use it and they want to capitalize on that. So in the long term, we think it's positive for the stock.
Speaking to traders this morning, Anglo seems to have a very late cycle feel to it, where, for example, it's now tidying up, where BHP has gone through that phase and is done unlocking value. And some saying on that basis then they're seeing more value in Anglo American right now. Do you share that kind of sentiment?
It's quite difficult to speculate whether it is a late cyclical play. We did see Anglo American really being the laggard last year within the resource sector with the contracts that they had out of South America really being held back, and once they got approval for that, we did see the share price play catch up. We're going to see Anglo American really, they have cleaned their books, they're moving in the right direction, they are going to perform, and hopefully in the next 12 months we will see them return to give shareholders greater dividends.
In the meantime, Goldfields reported better than expected second quarter profit, and that due to cost cut and higher gold prices. The market certainly more impressed with those numbers than those of Anglo American.
Correct, Alishia. Goldfields has done well. They have reduced their operating costs. They are operating in difficult conditions, with South African mines being the most dangerous. We are, however, quite conservative because they have missed their production targets. We had expected a higher dividend out of Goldfields. Whether they're going to be able to continue to maintain those lower costs and really step up our production is however, concern for us. So we're quite conservative on that stock, but the market seems to be quite happy with those results today.
Well, what's your view on African Rainbow Minerals, because it seems to be getting a pretty hard hit today after its trading update yesterday, where on the surface, I mean, looked pretty good. A 232 to 251% increase in its first half headline earnings per share is what it's expecting.
Alishia, I think it's a very good set of results. They are capitalizing on high commodity prices. They were hurt by a stronger rand. We are seeing a weaker rand in the short term, and if we do see continued rand weakness, they are definitely going to perform better. We think it's possibly just profit taking on that stock.